Good morning, ladies and gentlemen, fellow panelists, members of the press. Welcome to Cap Square Tower. We're sitting here today on level 40 of this magnificent building, and welcoming all of you to the Union Investment Roundtable Forum on Strategies to Increase German Investment in Malaysia, with a light skew on the budget outlook potentially for 2013. So, starting off the topic, what we're going to talk about today is, does Malaysia have what it takes to become an attractive investment destination? How do we ensure that Malaysia remains competitive? How do we ensure that Malaysia remains the destination of choice for investment in Southeast Asia? So we've invited 4 key members from, one from Malaysia and 3 from German companies who have presence in Malaysia to discuss this today. Malaysia recorded $32.9 billion in investments in FDI last year. We're probably one of the highest in FDI in this region at about 72%. Germany was our largest trading partner over the last 12 months. In fact, bilateral trade between Malaysia and Germany reached an unprecedented 10.32 billion euros, which is an increase of 43% from the year before. Also, over the last 12 months, it has created 25,000 jobs in Malaysia. What I'm going to do to start this today is I'm going to go around the table and get my fellow panelists here to introduce their companies and their presence in Malaysia. On my left, let me introduce Mr. Charles Neo from Deutsche Bank. Following on, Mr. Ulrich Dischler from Union Investment, and also the sponsor of today's event. Mr. Alexander Stadtfeld from the Malaysian German Chamber of Commerce, and Mr. Kumar Tharmalingam from the Malaysian Property Incorporated Government Agency. Charles Neo, maybe you'd like to talk a little bit about Deutsche Bank and Deutsche Bank's presence in Malaysia.
Thank you, Suresh. Deutsche Bank has had presence in Malaysia since even before I was born, 1967 to be exact. We have quite an extensive operations, and I think today we probably have about close to maybe 150 employees based in Malaysia. I won't elaborate too much on what we actually do, because we are bound by the licenses that we have. But I think Deutsche Bank as a global bank, we are very extensive in global markets activities. Global markets meaning foreign exchange, cash management, derivatives, debt capital markets, investment banking and corporate finance, which I'm from the division of investment banking corporate finance. And we've been fairly active. I think in the last couple of years, I think Deutsche Bank has been proud to be a sponsor, global coordinator for some of the largest IPO in Malaysia, such as Integrated Healthcare Holdings, and also riding on the foundation that Deutsche Bank is the #1 house for IPO in Asia. And I think we're proud to be where we are today after 40-odd years being in Malaysia, and continue to ride on very strongly. So should I stop there?
Fantastic, thank you. Next panelist is Mr. Ulrich Dischler from Union Investment Real Estate, and also the sponsor of today's roundtable forum. Mr. Dischler, maybe you'd like to introduce Union Investment a little bit further to the Malaysian public.
Yes, thank you, Suresh. Union Investment is one of Europe's largest asset manager, and in real estate currently Union manages over 300 properties in 25 countries, net worth of approximately 80 billion ringgit. So Union Investment decided actually back in 2007 to invest in Malaysia, so as part of their expansion strategy in Asia Pacific. And so it was beginning of 2008, and Union signed a contract for taking over Cap Square Tower after completion, the building where we are in today. So since then, actually, I think we've gained a lot of experience in Malaysia for the last 5 years now. And this also brought us to the conclusion that potentially, we could also expand our focus here.
Thank you. And third panelist, Mr. Alexander Stetfeld from the Malaysian German Chamber of Commerce.
Or MGCC, as we're known here, which was founded in 1991. I'm even a few months older than Malaysia. Speaking about MGCC, we are part of a network of German chambers in 80 countries around the world with 120 offices, which is connected to 80 regional chambers in Germany under the umbrella of the Association of German Chambers of Commerce and Industry. We are legally and economically an independent entity in Malaysia with a board of directors, with a management, and currently 28 staff, supported by 5 to 6 trainees and legal interns usually. So we're also basically a training provider for young people. We have 3 main tasks. One is, as any membership organization, so we provide a platform for members. We're currently the largest European chamber, maybe even the largest bilateral chamber in Malaysia, with more than 400 members. A platform to network, to find business partners, to develop certain views and discuss them with the Malaysian government or government authorities, or also the Malaysian business sector. The second one is the role of the recognized speaker of German business in Malaysia, recognized by the Apex business associations in Germany as well as the German government. In this respect, we complement ourselves a little bit with the German embassy, who comes in, the ambassador, of course, when it comes to policy issues about government-to-government agreements, negotiations. The most important part of our work, however, and where we employ our staff and create the revenues which is necessary to support the staff, to support a fairly large office, is providing business services to our members and clients. As we say in the name, it's a Malaysian German, so we do it both ways. Our typical client, however, is the German small or medium-sized company who wants to enter the market, establish a presence here, and we can provide those companies with services along the whole timeline of an engagement in the country, from first information, first consultancy, very basic information about the market, over market studies, foundations of companies, providing small office space as a kind of incubator base here in Malaysia, and so on and so on. So the service area this is our main area of activities here in Malaysia.
Right. And finally, my last panelist is Mr. Kumar Tharamlingam, CEO of MPI, Malaysia Property Incorporated.
MPI is basically a government agency that specializes in targeting foreign direct investment into a very narrow segment of the population, which is really real estate itself. It does not involve itself into FDI as a whole, because that's the role of our Malaysian Investment Development Authority. We want to be a catalyst and also a service provider for foreign direct investors into Malaysia, who traditionally go to the government agencies and then get caught in the bureaucratic processes. And the government felt that there should be a special agency that looks after investors who want to invest in real estate. So what happens is, as we've discovered over the last 3 years, that no matter what business the foreign investor comes in, eventually he needs a home to house his business in, whether it's commercial, industrial, residential, or even retail. So our job is to make that job smoother for him by giving him options. We don't charge a fee for our services, as we are funded by the government. So we come across as a very independent body that covers the whole market, both the GLCs and the private sector. So we don't have to have any special preferences as to who we offer the opportunities to foreign direct investors. We had a target market of Europe and UK at one time, but because of the financial crisis, we shifted our target markets to the Asia Pacific region. And our low-hanging fruit, which we look at right now, is really Japan, Korea, parts of China, the southern China, which is the Cantonese-speaking part of China, which really has a more empathic situation to Malaysia, because Malaysia is also a majority of Cantonese-speaking people here. And also from Hong Kong, Singapore, Indonesia, and parts of India, northern India, and parts of the Middle East, countries like Saudi Arabia, Qatar, and Abu Dhabi are major investors into Malaysia as well. We've had a very successful opportunity in the last 3 years to brand Malaysia as an investment destination. Now, Malaysia is well known as a tourism destination because our Malaysia Truly Asia story has been very specific and has achieved a great deal of success with more than 20 million tourists a year. But as far as investment goes, Singapore has done a much better job, and Hong Kong done a much better job of branding themselves as an investment destination. So we've taken some of the things that Singapore has done over the last 20 years and also putting ourselves in the same position and spreading this news outside there, that Malaysia has the same opportunities as other countries in Asia. We're not cheap. We are what we call affordable for the time being. But again, foreigners are interested only in the major cities of Penang, Kuala Lumpur, and the surrounding area, and Johor, with Iskandar being very close to Singapore. So we've targeted that area as the area of interest for foreign direct investment. And so we provide even statistics and information and also data on what's happening in those markets on a monthly basis to all those who ask for it.
So let me pick up on that point. Malaysia is an investment destination, and let me direct the first question to Mr. Dishla. Mr. Dishla, you chose, or Union chose Malaysia as an investment destination. You came to Malaysia, you invested in Cap Square Tower as a greenfield project. You effectively came here, bought a plot of land, you developed this 41-story building, you took on developer's risk, investment risk, and now you're taking on the leasing risk, which actually makes you almost a local developer in comparison. The question everyone would probably ask is, why did you invest RM500,000 ringgit in Malaysia?
As part of our global expansion strategy, so in each region, we were identifying target markets that could be of interest for us, actually. We are very conservative investors, actually, core funds. So our investors in the funds are very conservative. So of course we always have to manage risk, but at the same time we need to look for opportunities. So I think key for us is stability, and so wherever we invest, actually, so we look for stable elements. Now, if you look backwards to the Malaysian economy, actually, so you can say economic growth, despite financial crisis, actually has been quite stable, and the outlook is also quite stable. So I think this is part of the fundamentals, actually, that we are really looking for. And second, of course, is so that we also look for, in general, political and social stability. So actually a stable framework, so that would generally allow us, actually, to further investigate a market if it's interesting for us. Now, in the case of Malaysia, actually, so we identified a very good opportunity, and so I don't want to take all the credit. I think the story as well was that we found a very credible local developer in Malaysia with a good track record, good experience, good quality of product. So where we said, okay, we virtually do a kind of joint venture, in a way, saying that the developer would build for us, and then we take over the building after it's completed. But still being entrepreneurial in a way, taking on the leasing risk, saying yes, we are part of the market and part of the investor community here.
Fantastic.
Maybe
Thank you.
I can pick up this on a very general basis. You're asking why a German company are basically investing abroad, because it's a fundamental element of the German economy, of German companies. We have been for many years the world export champion. We lost this once or twice now because of another great economic growth, I think, to China. Of course, this is exports. Export is trade, but usually trade is followed by investment, so it's a natural process. especially since trade will have its limit. So if you still want to develop certain foreign markets more stronger, or from a certain foreign market, regional markets, you need to invest. So it's a natural process, which is part of, let's say, a German way of business life.
Now, Mr. Seinfeld, you said something very interesting when you're talking about the role of the MGCC here. You said that you also provide incubation services for German SMEs coming here. Now, what would set the Malaysian platform, a differentiating factor for the Malaysian platform versus setting it up in Thailand or Indonesia, where you have abundant, low-cost labor, you have easy entry into the market? What separates Malaysia from the rest? What makes Malaysia the destination of choice in Southeast Asia?
Well, there are a few comparative advantages, a few I would say for each of these markets, including Malaysia. The competitive edge, in my view, for Malaysia is the combination of factors. We talk to companies who are looking at various markets or various destinations when it comes to investments in Malaysia, and usually the combination does it. And I can compare it a little bit because I worked before in Indonesia from 1999 to 2004, and early in the 90s, 4 years in India. You might find lower property prices in Thailand. You might find better skilled people in Singapore. You might find lower utility costs in Indonesia. But this combination in Malaysia is a very good package. If I take out a few things, once, and this is basically at the entry point, is the attitude of the government, the attitude of government authorities, and it could not get much better. From our impression, the institutions, it's the Ministry of International Trade and Industry, it's MIDA as the first contact point for investors, but it's also the rest of bureaucracy, be it labor-related, be it tax-related. Malaysia has a strong institutional setup, and it's good people there. People who are business-minded, open to find solution when it gets difficult. That is one. Overall cost factors are quite good in this country. They're attractive incentives for foreign investors in terms of pioneer status or investment tax allowance. All these factors, the combination eventually does it.
And that's a great
I'd
segue.
like to extract.
I'd like to push that question to you actually, because I think
before
you
ask me any question, I'd like to extract what you actually said just now. The platform, right? You talk about platform that allows funds or to invest. Comparison between Malaysia, Thailand. And I'd also like to draw on what you actually said about what makes it possible for you to invest in this building, which is the core funds. I think, Malaysia may have a lot of real estate, but if you don't have proper platform to extract the pockets of capital from, global sources of liquidity, I think what you need is to target certain platform, how you extract that capital, because there's a lot of capital, but there's a lot of real estate, but you've got nothing to facilitate. I think, that you need that facilitating power that actually creates, that pool the funds and facilitate the investors investing into real estate. I just like to draw a little bit of, personal career experience I've had. I spent half my career in the late 90s creating the REIT platform in Singapore. Before the REIT platform was created in Singapore, I think the institutional capital invested into Singapore real estate, it's probably less than the amount of transaction that Kumar has done for real estate in KL in half his life. Which is quite a lot, but I think Singapore, given the currency, is quite significant. But the institutionalization of the real estate is because there is no proper platform. Investors from whether it's US, UK, or Japan, they can't invest in Singapore because there's no platform, right? There's no liquid real estate transactions. So that's why Singapore started to think about the models in Australia, in the US, and the things that Asia were not available at the time, which is the REIT market. So REIT market started what you call a platform, a liquid platform that allows sponsors, developers to extract capital, right, from the institutional funds, whether it's Germany or US, and to invest in real estate and to make the real estate a liquid product.
Yeah.
And then the story goes on when the market is liquid, and then guys like Ulrich will see, hey, I have a tick box there because there's a liquid market. I can invest and I can sell quite easily, right? So I think that's important, right? And you've seen, how the REIT market has grown significantly. And putting my head as a regional corporate finance guy, I run around in Asia. I go to Hong Kong, go to China to look for opportunities. And I think what's interesting in Malaysia is that Malaysia is also very proactive. And I remember dating back to a couple of years ago with Securities Commission, very proactive in terms of trying to establish that as well, ahead of any other countries in the region. And recently Deutsche Bank, very proud, successfully raised capital for the likes of Pavilion REIT and IGB REIT. Yep. I think those are important because you raise capital for investors through your core funds, right? What you actually did was creating that bridge. You bring the funds in, and that's how Cap Square was made possible. Yes. So I think that platform is important. So I think one thing that Malaysia has done very successfully is the establishment of the REIT sector, and for a long time we're starting to see Kumar, for the last 20-30 years, have you seen large mall transaction being raised from institutional investor perspective? Sunway Pyramid, billions of dollars are being transacted. So for the first time, so that platform facilitates capital coming in, and I think that's a good thing.
So let's segue back to Malaysia then. As Malaysian representative of property under this government, do you agree with Charles's view on the platform?
We've never had a foreign direct investment into real estate of such a predominance until the REITs became large enough. Because one American fund told me that unless the REIT fund is $1 billion, they find it very difficult to come in, because even if they took 10% of a local ringgit fund or 20%, they'd be the major shareholder in the fund. So they wanted a large enough fund so that they could exit easily. So the Sunway, the Pavilion, IGB, the IHH, these REIT platforms and listed platforms have become the new gateway for funds to come into Malaysia, into real estate in a more liquid fashion. And because all of them are in excess of 4 billion ringgit,
yes,
which is more than $1 billion. So that platform is slowly growing. There are, of course, like in Singapore, there are REITs that are very small, few $100 million REITs, and there are also $1 billion REITs. So we need those $1 billion REITs to attract real estate. But the interesting thing is, once you have that taste of Malaysian real estate through a REIT platform, the same funds then want to come back here, and this is what we're seeing now with companies like ING and EXA, who are coming into Malaysia, setting up real estate arms here, and saying, look, can I buy my own building? Can I buy my own risk-averse investment, just like IGB or Pavilion? Now, unfortunately, we don't have that kind of we don't have that kind of completed buildings available for sale.
Yep.
Because Malaysia has old money, and the old money and the banks and the PNBs and the Khazanas have locked everything up, all the prime real estate. So it has to be new real estate. So this is where, Ulrich, you did the right thing. You came in and said, I'm starting from scratch. I built my own building, and I'm going to own it here. Now you have a platform. A company like MGIP, who own the old Yao Chuan Plaza, they turned it into the DoubleTree by Hilton and the Intermark. Now they are already a $1 billion fund. In that one project, they already have 4 million square feet, and the current value is about $1 billion, and they're going to go for a REIT as well, sometime next year.
Yes.
So there'll be another opportunity there.
No, but let me take it up, because so we are actually taking it one step further from our position, because so you indicated, so if we would invest into REIT shares, so we would have a very liquid market, easy exit. So because by law we have to to invest directly, Actually, so we're taking actually the full commitment, saying our fund actually has become legal owner of this building. And taking all entrepreneurial risk for this, and but obviously, so going forward into the future, despite our long commitment to Malaysia, if we should some point in the future think about a potential sale, so then so REIT could be a good platform for us actually as an exit.
I mean, it's
so
all
in that regard also helps us as well.
Yeah, I mean, it's all depending on the spectrum of where you're investing, right? I mean, if you look at the real estate value chain, it's all about risk and return, right? So in a globalized environment where Ben Bernanke decided to spread the world with liquidity, unlimited amount of bond buying by Draghi, so there's a lot of liquidity sloshing around.
Right.
So, and this liquidity, some of that is going into real estate, and the real estate people are providing the kind of yield that you otherwise are getting 1.4% for US Treasury. So that's why there's a lot of money chasing real estate globally. So I think the question here is that what kind of risk spectrum are you putting your money in? I think what Urit is saying is that you're looking at the wholesale core fund or maybe opportunistic fund, which is more on the unlisted spectrum, probably a little bit more risk and return, but REITs is probably lower risk and lower return.
So the question is Malaysia now a destination to be considered as a safe harbor in these troubled times? Over the next 3 years, should Malaysia be promoted as the investment destination of choice for funds coming out of Japan, Korea, Europe, America?
I think I've heard
Actually,
that before. I've heard
actually,
that.
two questions. It's a two-pronged question. Firstly, are we the safe harbor? And secondly, what sectors would we consider in Malaysia? And this question could be directed to Mr. Stedfeld as well. Could we say we have a culture of excellence in that we could promote, apart from real estate or including real estate?
If I may look at that from a capital market perspective, I've heard that comment before in the capital market, simply because in capital market in Asia, you look at it from a relative perspective, right? When you compare with Hong Kong and Singapore, where trade is 300% of GDP, anything happen in the US and Europe, obviously Singapore and Hong Kong will get relatively affected because they're so globalized, the economy is so exposed, whereas Malaysia is also have a significant amount of trade, but Malaysia also have a significant amount of the underlying consumer demand. So because of that, they're relatively less affected. We have a lot more strong underlying economic fundamentals such as the urbanization, increase in rising income per capita, young population growth, etc. So that's sort of decoupling a little bit, right, in times of turbulent global market environment. So that's what people were saying.
We're not affected by shocks on trade.
Relatively less. I wouldn't say you're not completely affected. Nobody's completely shielded. But it is one of those when you're in capital market environment. You want to get away from headwinds like in Hong Kong, Singapore, where you're directly affected, into countries where you have strong consumer themes, strong population growth stream, sound government policies, etc. Right. So that's more from the capital market perspective. But from a real estate perspective, I wouldn't be too complacent, right? Because the REITs market has developed quite nicely, but it's still relatively small, right? I mean, you compare with the Singapore market, it's about 30-40 billion US. Hong Kong market has got 1/10 the number of REITs in Singapore, but the size is almost half, because the value of real estate in Hong Kong is large. I mean, China has got significant amount of investment opportunities. There's, we talk about Iskandar and we talk about the Tun Razak Exchange, but China, whether you go to Guangzhou, whether you go to Shanghai, whether you go to Tianjin, there's so many other mini cities being built. There's significant amount of development opportunities, significant amount of investment opportunities for people like Ulrich. Right. So I think the competition for global real estate capital is intense. So I think what Malaysia has done is very good. I think the REIT platform has been quite successful, but I think we are only attracting a small portion of the real estate capital just sloshing around in Asia. Right. So I think more needs to be done. I think the idea of the Tun Razak Exchange is fantastic. Iskandar is developing, fantastically well, very nicely. People are talking about it right now, and there's a lot of investment that's going into that. But I think, more needs to be done. I think the competition is intense. It is a regional competition, right? So we need to do more to extract capital.
Yeah.
And bringing in capital as well as intellectual property from Germany, from German industry. What do we need to do to enhance that?
Well, maybe start a little bit with your question whether German business feels confident with Malaysia. German business has a long history in this country.
Yep.
And the first company coming here was a trading house, Bein-Meyer, in 1891. One of the well-known, better-known companies is Bosch, who has a presence here till the 1920s, and many of the bigger companies, names like Siemens, B. Braun, they've been coming here in the 60s and 70s. So there's a lot of confidence in this country. We're not looking so much from the purely capital point of view, but from investments in industrial production usually, but also in the services sector. And these companies usually come with a checklist. Apart the issues I mentioned before, it is issues like political and economic stability, protection of investments, intellectual property, is also the general legal situation in this country, institutional infrastructure, and Malaysia is doing pretty good, quite good on these areas. I would not be able to come here in these areas with very specific issues, with concerns or wishes. We have them in other areas we might touch upon at a later stage of this talk.
And what about a culture of excellence? What sectors do we really excel in this region? I mean, there must be something that we do better than the rest of Southeast Asia to make us attractive. I mean, apart from obviously great buildings, good infrastructure, a decent health system, young population,
well,
English speaking.
I'm trained as a lawyer, and from the lawyer usually here it depends. So it depends very much what kind of company you are, what kind of interests you have. Usually German company interests are long-term. So, but you have significant differences between the markets. You have, for instance, markets which have a much higher energy demand than Malaysia. So you find there are companies who are in the energy sector, not going to Malaysia, where you have a gap between demand and supply for the benefit of, let's say, oversupply of 30-40%. But if you look at markets, regional markets, which in other areas quite difficult, like Vietnam, Bangladesh, Myanmar, Indonesia, for these companies, these markets are much more attractive than Malaysia. But if you're looking at high quality, high technology oriented production destination in the ASEAN region, let's stick to the ASEAN region, you're very likely to come to Malaysia.
Let me make one point here. So I think Germans typically are very systematic in their approach, and so what we see overall now is I think first step is really analyzing the current competitive environment. So I appreciate comments from Prime Minister, so that Malaysia must intensify efforts to compete within the global economic environment, especially in the region. And I heard it before, competition for foreign investments becoming more intensive. Yeah. So I think this awareness is the start of actually to say, okay, so what needs the government to do in order to attract foreign capital, right? So now obviously I understand government has certain initiatives like ETP and GTP. Now I think putting programs in place to attract capital too. So of course there's also that's very important actually to have a plan. Yep. Now, of course, expectations are whenever there's a plan announced that it will be implemented immediately and we will all see the results. I think, of course, some things take some time, but having the awareness what it needs to take actually to be competitive, and also putting things into plans so that makes it transparent for people, I think that also creates trust in the future competitiveness of the country. Now, if you look at that actually, so then in Southeast Asia, I think so that for sure is something I would say. Well, in terms of excellence, So that is for sure leading, because it looks quite systematic, and again creates trust actually for the future growth perspectives for the economy, for the country.
So let me ask a question to the entire panel. Has Malaysia done anything significant in the last 4 years to differentiate itself?
Yes.
Mr. Kumar?
It set up, it rebranded Iskandar into looking at it like how Hong Kong and Shenzhen developed, and targeting primarily to tap into Singapore's eminence as the financial center of Asia right now, actually. Probably overtake Hong Kong in the next few years. So by doing that, they looked at Iskandar and realized what was missing was infrastructure. And over the last 4 years, Khazanah, our National Equity Corporation, spent nearly 8 billion ringgit putting a network of highways and planning implementation including tax benefits for foreigners investing in certain sectors of Iskandar. And it's taken them 4 to 5 years to tell the story over and over again until right now Iskandar has reached a tipping point where it's really beginning to take off. The last 1 year, our records show that Iskandar real estate has gone up by 34%, which means that foreign investment in Iskandar into real estate has gone from 8% to 24%. Now, this foreign investment is mainly through Singapore, but not just Singaporeans. It also involves other countries that are living in Singapore and having operations in Singapore who are now coming into the Iskandar region. That's one part of it. Kuala Lumpur has the Twin Towers and the Twin Towers branding, which became a center for oil and gas. But over time, over the last 5 years, Malaysia has become the world's largest issue of Islamic finance products. In fact, last year was 34 billion. And why was that? Because Malaysia's Sharia compliancy laws are accepted worldwide, unlike the Middle East compliancy laws, which are not accepted in all countries. Malaysia's is. So even those from UK and from Singapore and from Hong Kong who want Sharia products come under the Malaysian jurisdiction to issue Sharia bonds. Because of that, Malaysia looked at the opportunities where we can leapfrog, and so TRX was created, the Tun Razak Exchange. This is going to become our Kuala Lumpur International Financial District, which is actually now renamed TRX, which is going to be the financial center for Kuala Lumpur. It's long overdue, and the base is actually using the Marina Bay, Singapore, as the opportunity, and also Canary Wharf in London. So these two similar creations, which happened over a 10-year period, is what's happening in TRX. So these two alone are major catalysts to grow Johor and to grow the Kuala Lumpur as the center of financial excellence. Penang has created its own network, and the recent reinvestment by Intel of 4 billion ringgit in Penang, $4 billion in Penang, to set up their new chip center, and Bose and other American sound companies to relaunch in Malaysia manufacturing processes to sell motorcar and home entertainment centers in this region has become our e-capital, our Silicon Valley. So each of these three centers have become centers of excellence. And Kota Kinabalu on our east coast has more flights per day than KLIA, because it's an open airport, 17 airlines flying there every day, and it's becoming the largest ecotourism center for Asia. So you've got these pockets, as Charles mentioned, we've got these pockets of excellence. Now the rest of the country is growing as well. Don't forget, we are 70% urban now. By next year, Malaysia will be deemed an urban country, because more than 20 million people out of our 30 million population now live in towns. And their needs are different from those living in villages. And so the country is maturing. And what the government realizes is, the problem is that we are a middle class country trying to cut out the middle class trap, what they call the Dutch disease. You know, where you've got so much of money that you're comfortable in that range, and you haven't achieved that next step where you've got what we call entrepreneurship. And so The government's aim is TRX, is Kanda, is to create opportunities for Malaysians to say, hey, look, there is a world out there, and if you don't catch up, you're going to be left behind.
Mr. Statfield?
Well, I'd say I didn't see any quantum leaps in the last 4 or 5 years, but we didn't expect any. Because when we look at Malaysia for a longer time, it is this constant strategic development since the 70s basically to the 2020 goal, which distinguishes Malaysia from other countries. If I have to say something to your question, where I see possibly something that comes closest to a quantum leap, I would say it in acronyms: GDP, GTP, ETP, EPP, EPU, PEMANDO, and this is something which shows, especially in the last 4 years, where this country is going, how much significance it puts in economic development, but with a supporting framework of the government. And you have institutions which I believe are quite unique in the world. I have not come across them. You have a unit at the Prime Minister's office led by a person in the rank of the cabinet minister, which is tasked with implementing policies. I don't know we don't have something like this in Germany. I mean, PEMANDO, it's quite unique, and it's something special, and it drives developments very clearly, as we can see over the past years, and we're quite confident that this process will continue.
Fantastic. Mr. Dishla, your experience here over the last 5 years, what would you say has been a standout?
Well, I think, really for us, so a good help support is obviously, is that we do get government-funded support in a way, saying that, because we were new to this market, whenever you come to a new country, of course, you have to find your way in.
Yep.
So if you have government initiatives actually to help foreign investors to enter the market and to familiarize themselves, I think that is for sure something that was of great help for us. So I definitely wouldn't want to miss for the future. Because that is I think has been an outstanding experience, because it's not given in any country typically that you get this kind of government support and help actually. So typically you have to find your way around. Of course, the more mature market is typically the more consultant advisors will be available as well on the more private sector level.
Yeah.
But still, I can say so that has been a very good experience for us.
And Charles?
Yeah, maybe I wouldn't. I'll probably reflect a little bit more in terms of capital markets in general. I think the amount of opportunities that has been identified by the public and the private sector in Malaysia has been very, very interesting and very exciting. The capital market activities has been amazing, I would say, in the last couple of years. It's been significantly more interesting than many parts of Asia. I like to share a joke that there is I wouldn't say the name of the bank, but a very, very senior global investment banker based out of Hong Kong at one point couldn't get a business class seat from Hong Kong to KL. I mean, it's that packed, the amount of bankers coming all over the world and all over the region coming to KL. And he had to sit in the economy class, and that's how
sounds upsetting.
Exciting it is in the capital market activities. And it's also a reflection of the amount of opportunities, because when you see the amount of capital market opportunities, it's a function of public and private sector identifying opportunities to recycle the capital elsewhere. So I think the capital market sector, 10 years ago, 5 years ago, you hear all this amount of capital raising from China, Hong Kong. You ask any capital market guy, not just in Asia but everywhere else, it's Malaysia. It's astounding. I mean, you're looking at the size of the economy compared to Singapore, Hong Kong, and China. Senior global head of banking had to take economy class to get into KL because there's no other seats. It's full. And also, I think the amount of proliferation in the financial services sector is very encouraging. I mean, Kumar talked about the Islamic financial sector.
Yep.
Recently, I just we have this global call among our colleagues. People from London are calling me and telling me, "Hey, do you know EPF?" I say, "Why? Yeah, of course." they are the largest, one of the largest, if not the largest investor in London,
Yep.
right? I
Yes.
mean, this is a smart capital, right? We're looking for well-established city. Property prices are off the peak, and these are the smart capital chasing, and everybody is calling me, and me being head of Asia and head of Europe and head of US is asking, hey, can you make an introduction? So I think there are opportunities. You've created the visibility.
Yeah.
Right, you've created the visibility. The public and the private sector is growing, tapping on the capital market. I think the question here is, what's the next step? How do you seize that opportunity? Because Malaysia has done such a wonderful job putting itself in the global map, whether it's Islamic financial sector or capital market in general.
And that's actually a great segue into the next question. It's been rosy pictures so far. So the Malaysian experience, what has worked? We've heard. Now let's talk about what hasn't worked. Let's start with union investment. What hasn't worked for you in Malaysia? From a government process, from a private sector process, let's just say any initiatives that you've encountered here which you're having trouble with, things that could be improved?
Well, I think, in our specific case, I think I indicated earlier, so actually overall things have worked quite well. So of course in terms of, I would say sometimes maybe in terms of speed, so of course the desire would be so that some initiatives could be executed faster. So I would say so that's, but I think that goes into the GTP transformation program actually, so that for government approvals, of course, so you would hope that approvals would be granted like in a short period of time. So I'd say so that's the typical desire of a foreign investor.
Yep.
So yeah, having said that, I think that would be something for sure where we would say some approvals could have come faster, could have granted faster, but I think, at the end of the day, it was not a problem obtaining government approval for everything we needed to do. It was more really the timing.
Mr. Stadtfeld, what hasn't worked? Your experience in Malaysia is a lot more granular.
What are the challenges, or where are certain limiting factors which we see in terms of economic engagement by German business? This is quite clearly defined in the current status of the EU-Malaysia Free Trade Agreement negotiations, which are stuck at certain points. To a lesser factor, to duties on goods, import duties on goods, but there are some. The main issues are liberalization of the services sector. So we do see limitations still in although some areas have been liberalized in logistics, in the financial area, in business services, which are part of the negotiations. The automotive sector is an issue. It's of course not only a Malaysian issue, but a regional issue in ASEAN. But we've seen with the current engagement of Volkswagen what is possible, what would be possible. So notwithstanding the limitations that still exist, Volkswagen is going in a major way investing in Malaysia. But eventually much more could develop of these areas, and a more specific issue, but also important because it limits the access to certain business areas, is public procurement.
Yeah.
Where there is no free access, and it's not only foreign companies that are affected, but also local companies if they don't have the required ethnical-based shareholding.
That's an interesting point.
So these three areas, and well, let's and talk about the Dutch disease and factors maybe a little bit later.
So the question I was going to ask you on just even on public procurement, should the private sector be driving that change? Should it be coming from the private sector, or should the public procurement mandate now remain status quo?
Well, public procurement comes into play whenever a public entity or public-owned entity buys certain things. And here it's not the free access by any company, but you need to have a certain either a certain Bumiputra shareholding in the company, or you have to go through a Bumiputra partner. I know it's a sensitive issue, politically, social related. It's a major discussion point currently between Malaysia and the European Commission, but it limits certain things and makes products more expensive, and also quality-wise, the entity procuring certain products will not get the best quality at the best price. So something which relates to the overall economy. It's not an issue for all companies, but it's a major issue for some German companies also.
So in an ideal situation, what would you say? What would you like to see? A complete. I don't think you're ever going to get to a point where you're going to have complete transparency in public procurement. And my experience is that doesn't happen in any country. But there must be a solution or a midway that allows that.
Of course, I'm having also a background in the Ministry of Economics. I was even working 3.5 years in the budget department of the German Federal Ministry of Economics and Technology, also dealing with procurement issues. Of course, there are various processes, but one element which is again unique to Malaysia is that the company needs to have a certain ethnical-based shareholding. And this is something which is clearly voiced by the European Union. It's not a German, it's also a German concern, German interest, but of course trade-related negotiations do not take place between individual member state governments in Europe, but by the European Commission. And it's a clear goal to do away with this. And it's it sounds simple, it can be done simply, right. Let's say politically, with just one scratch of the pencil. But of course, we are very well aware about the sensitivities in this country. So I guess a gradual approach would already help.
Mr. Kumar?
I think okay, let me answer some of the questions you've asked. On the civil service side, the government has done a great deal to make the citizens of Malaysia's civil service experience a lot smoother. For example, it takes 2 hours to renew your passport. You can now renew your road tax and your all your licenses online, and you can go to the shop and you can do it in 5 minutes. It can be done in the post office. So I think the ordinary citizen is quite satisfied with the fact that the government's EG program, this economic transformation program, has done very well, has pushed the forward. I was involved in the FTA negotiations in India and in Australia as part of the team. I can tell you that the things that come across, let me give you the Indian experience. The Indians wanted direct access to professional services in Malaysia. Now, we graduate 5,000 engineers a year. Indians graduate 430,000 engineers a year. If we open the market to free access to engineers from India, our boys will find no work at all. So there are these imbalances which the Malaysian government says, hang on a minute, there should be a like for like. And so an Indian government, for example, doesn't allow eggs to be transported to India, but they want their products, milk, to come to Malaysia. So we've got that gap between where they are very good in some products, we are very good in some products, and the FTA tries to balance it. And so there's a time frame of over 6 years in which we can slowly open up the boundaries. Australia is the same. And so we also have the same issues there. So there are some barriers which we've done. On the equity issue, now we've traveled within the ASEAN region ourselves, looking at opportunities in real estate. Everywhere in ASEAN, you need a local partner to buy real estate, except in Malaysia and Singapore. So I always wonder, we are the only country in ASEAN that allows a foreigner to buy freehold real estate. No other country in ASEAN or in the Asia Pacific region allows that. In fact, in Korea, real estate is spiritual. They don't even want foreigners to own anything except a lease for 25 years. So I'm always puzzled that though we have these opportunities, we don't come across as being a proper country to invest. We should be actually having people walking through our front door and saying, your real estate is so secure, working in the torrent system, you can do this. Malaysia has slowly become a logistics center. Over the last 4 years, we've noticed that more and more companies are relocating the back end of the offices from Singapore to Malaysia. I'll give you 2 examples. Vale is the world's largest producer of iron ore. They are listed in the New York Stock Exchange. They are worth something like $60 billion. They opened a facility in Malaysia, in Perak, in Lumut, where they purchased 1,500 acres of land to park the iron ore for distribution in Southeast Asia. Now, they did not come here because Malaysia brought them in with cheap financing. No, they came in on their own. They had been to India, they'd been to China, they'd been to Vietnam, they'd been to Solomon Islands, they'd been to Indonesia, they'd been to Singapore. And in the end, independently, they chose Malaysia as their trading center to trade iron ore, Brazilian iron ore in Southeast Asia. Coca-Cola is another company. So coming back to Vale first, what Vale did was set up an office in Singapore where there are 5 directors in Singapore occupying 5,000 square feet of office space. They have 90,000 square feet in Kuala Lumpur, where they have 75 people working in Kuala Lumpur, of which 90% are local. And they're setting up their back-end offices, their crash recovery, their purchasing orders, their financial center. Everything is in Malaysia because of broadband connectivity, and they're just down the road from Singapore. Coca-Cola is another company. The first freestanding Coca-Cola bottling plant in Asia is set up south of Kuala Lumpur, near the airport, where they hope to manufacture green Coke from rainwater. So Coca-Cola again has a magnificent office in Singapore, but the back-end offices in Malaysia are becoming more and more prevalent. The Singapore government itself has decided through the SMA, the Small and Medium Chamber of Commerce, to relocate the industries in Jurong into Iskandar. And this will happen over the next 2 years. And they're even providing incentives, cash incentives for companies in Singapore to relocate to Iskandar because Singapore wants to take the land back. So Malaysia has got its success stories and got this. But at the same time, you must be, the government is careful that it doesn't become another free trade port like Singapore. Now, Singapore's last elections provided a little surprise to the government by the shock in which the locals said we have too many foreigners in this country. Now, Malaysia, of course, has a larger population, we won't have that issue. But we need to protect local sentiments for a while until people are comfortable that the companies coming in here are not here just to trade and take money away, but also come here to put something permanent behind so that they can be of benefit to the country. And I think that's what the government, and for me, being the first time sitting after so many years in the private sector, now going to the government side, and looking at it from the government point of view, I can understand trying to protect the locals from the onslaught of other countries with a higher quality of life for coming here because the countries, as one Japanese told me, you are tsunami free, you are flood free, and you're earthquake free.
And
so he said, you know, I said we still have floods in Kajang and Sentul. He said, no, you don't have the whole country in floods like Thailand. So I think the opportunities in Malaysia are immense, but the government is very careful that while we are a safe haven, we also need to protect the locals from this until we are able to cope. And that's why the ETP and the TPP and all is to make everybody come up the ladder so that we can stand at equal opportunities.
One last opinion from
Maybe I'll just like to extend to what Kumar is saying.
Do.
I mean, as you can see, lots and lots of multinational corporations coming to KL or Malaysia to set up the base. I think, typical of a fast-growing emerging country like Malaysia, there's a lot of opportunities. Maybe just one observation, improvement that I would say is that, as you can see, more Grade A tenants are coming. historically, a lot of developers are chasing for that risk spectrum, which is fast developing, take quick profit. I think going forward, as we can see more multinational corporation coming in, we need to focus a little bit more on maintaining sustainability, quality, maintenance, specification of grade A buildings to attract. I mean, we're talking about platforms, right? We're talking about creating more and more real estate investment opportunities. Guys like Ulrich will probably, like to see more of those, investable grade A type buildings that will focus more on sustainability and maintenance. Obviously, you have to focus on short-term profitability. I mean, if you look at regional landlord that has done significantly well on that, like Swire in Hong Kong or Mr. Furusan in Japan or CapitaLand in Singapore, they're all looking at sustainability investing for the long term, whether it's eco green or grade A specification. All those are natural transformation, right? Focusing more on maintenance rather than developing.
Talking about the asset management
skills.
And I think that segues into what something that Union Investment specialize in.
Yeah, well, I mean, if I take on that, actually, for us, when we came here, I think to a certain extent, I mean, our approach was as well to bring in a certain global standard in terms of managing properties. I mean, we're in a global landlord. We have over 4,000 tenants as our clients, and I think our client relationship with our tenants is very important to us. And I think we have this long-term approach also in that regard. Also, then, I mean, if you look at some buildings in the market, obviously, they would probably need some renovation, refurbishment. So we are focused really on sustainability, really maintaining long-term value. And I mean, the interesting thing for us is going forward now, you see for some new properties coming to the market now, obviously. So the average quality actually improves dramatically. And so I think now we're getting towards a point, and I think Tier X actually will be the next big step actually. So in creating this more global business environment really, so that for sure will also help attract more MNCs actually into Malaysia.
That's a raw nerve, because actually you're right. What we lack here is talent in asset management.
Yes.
And that's something we have to grow. I know CapitaLand spent millions of dollars training their people in best practices in asset management, and they still have. In fact, they just started one in China, in Shenzhen. So maybe Ulrich, you could do this, putting these best practices of asset management into a portfolio, and setting up a center to train your people into asset management. You're going to lose them as soon as you train them. You lose them 30-40% as they get poached by other people. But this is a natural progression.
I think yes, natural progression.
Yeah,
yes.
So Kumar will give you the idea. You train them up, and then Kumar will poach them.
They said that in Singapore, Citibank was the trainer of bankers for a long time in all the other banks. So I think it's a very good idea, and I think what we lack here is asset management and managing assets for a longer term period and maintaining them in the quality that they're supposed to be maintained. It's a very, very good suggestion. I'm going to take you up on that.
Okay, well, please take me up on that. So happy to discuss for sure.